Burgess and Bolton's weekly wrap-up.
Hello, Ben.
Hi, Jeremy. You know, on YouTube videos, quite often they say what people underneath say, "Oh, what was that great piece of music?" We never get that, do we? We never get that.
It's a bit of Eurobeat versus, I don't know, indie rock.
Yeah.
Got a tune there. There it gets us going, doesn't it? Hello, everybody. Hello, everybody, and welcome to this week's edition of Burgess and Bolton Weekly Wrap-Up, where we look at everything to do with the London market, technology, culture, change, innovation, and everything else in between. This week, it's part two of our special, where we have an interview with Matt Hodges-Long, co-founder and CEO of Track My Risk. Last week, he was talking about kind of the role of data in the London market. And this week, he turns his attention to the Grenfell Tower disaster and the role that insurance plays in that, and just the complexity of the whole incident. And we'll come back to that before we play the clip. But before we do that, we've got news. So I've got some news, Ben. So this week we had TinTech London Market, and we had a series of sessions over the course of 2 days. It was a good event. Lots of people turned up. Lots of discussion in the chat. It's really good. I've selected one clip. It's just 2 minutes, and it's a really interesting concept by Paolo Cumio, who is the Director of Operations at Brit, and he brings in this idea of, as well as technical debt, you also need to think about operational debt. And so in this couple of minute clip, he just explains what that means and some of the implications. So I'll play this, turn cameras and mics off, and here is the clip.
Fab, thanks. So the two highest scoring ones there perfectly matched with technology, legacy, and cultural inertia. So some quick thoughts. So I'm an ops guy more than an IT guy, and I see the word technology sort of nicely spanning those two. Other people have different views, but I think that we're sort of all technologists here, so to speak. But I try to think of a term of what I call operational debt. So many of you have heard of technical debt as a term. I try and expand that slightly to operational debt. And what I mean by that is, yes, we all know that if we have old legacy IT systems, then there are costs and complexities of upgrading. What I mean by operational debt is where we need to think about how our operational processes, as much as the technology are impacting our ability to drive the change. And so an example would be that if we wanted to digitize a process for how we engage with service companies, if over the past 10 years, as we've set up ever more service companies, we've set them all up in the same way, then the day that it comes to digitize that process, you have one process and you digitize it. If for very good business reasons, each one of those service companies over the past 10 years has been set up in a different way, which the humans managing it have been completely able to cope with, then when you say, right, now let's digitize this process, suddenly you've got 5 or 10 or 20 or 30 different processes, and therefore 5, 10, 20 times the effort. And that operational debt point, therefore, is as important to think around as in terms of pure technical debt when it comes to transformation. And also very important, for everyone on this call who, is not just thinking about how to do digital transformation, but is also at the same time trying to drive through, all of the other everyday changes that the business is asking for. When someone comes along and, maybe a service company example, it could be anything, says, hey, we'd like to put this new process in to support this bit of business growth or this new class or whatever it might be. Stop and think, is it, great if you're using the same IT system, you're not creating yourself any more technical debt, but are you creating a new process in order to do it with people having to take different steps? Because those people might be able to cope just fine, but the moment you want to digitize that, then it's far more effort. So, a sort of a thought out to you all, think beyond technical debt to operational debt in every change you make.
That was just one clip from the 2-day conference, but I thought it was just really good way of thinking about the challenge of transformational change. It's often depending where the change is being driven from within an organization, is often the area that gets the most attention. And if it is IT, then maybe other function areas need to be brought in as well to make sure that that's as smooth as possible.
It's a big issue. And I've been doing some work this week with a global team, and we were talking about some of those same issues. I mean, I think one of the things that's challenging is the the kind of institutional necessities that you've got to work within, or the framework you've already got to work within. That's one issue, because reality is that what you'd really want to see is that we're not just digitizing process, as Paolo says, you're also being able to invent new ways of doing things, and think of new ways of doing things that you then subsequently digitize. But he's absolutely right that that's fine as far as it goes, but it may be something that is not then it's not very easy to digitize. So you've probably got to work it. I think he's suggesting you work in some kind of balanced organization, and not just do one thing or the other.
Yeah, definitely. So my other bit of news this week is a bit more lighthearted. Last week, this hadn't gone massive by the time the show went out, but Jackie Weaver was an internet sensation with her "You have no authority," and then kicking out the chair of the parish council. And that was followed this week by the Texas lawyer that couldn't get the cat filter off. This little picture here sums up, obviously, his distress as he's trying to look around the technology to turn it off. I am here live. I'm not a cat. It's a great one. But I'll tell you what I thought, and we've talked about this before, but the way that these technologies, they started out a year ago and how they're being used, and it's just interesting, isn't it? What grabs people's attention, but also within organisations, how they're being used, and that it just tickled me. So that was it, really.
I thought it was great, the cat one, because they were lawyers, and there was such a sort of lack of any sense of humour around it, wasn't there? Which is a sort of many meetings I've been in with lawyers. It's like that. You're thinking, oh, there's a funny side to this, but nobody sees it in the room. And then when there's a cat, they didn't see it. He was aghast, wasn't he, behind that cat thing?
Absolutely brilliant. I think you've got a bit of news about sales and Zoom, following on from our touching on Zoom here.
Yes, so this is the. I think this is a brilliant publication, the Canadian Underwriter. It has so many good articles, and I can't recommend it highly enough. And this one by David Gembrough, I think, is about video conferencing brokers setting sales records during pandemic. Now, this is not an official survey in any way, but they ran a webinar with various people in Canada from the brokerages, and two who are mentioned in the article, Gallagher's and Marsh, not insubstantial brokerages, were saying that they had broke every sales record in 2020 through doing sales on video conferencing. And the reason this caught my attention is obviously because the common theme has been sales, and I've said this myself, sales is not very easy or is impossible, when you're not doing it face to face. But what they're saying is actually we've had a fantastic year and we never expected it. And much of this is because of the productivity that we've achieved through the video conferencing. So they're saying that, where they would do 5 or 6 meetings in a week, now they can do 5 or 6 in a day. Now that might obviously take its toll on those individuals who are having to do that, poor sods. But I think it does show that actually, if they're right, that for certain, probably not for all types of business, but for certain types of business, you can do this. And I thought about it, and I thought, well, I don't necessarily see why not. I mean, I spent absolutely forever getting our PI insurance renewed, and it still hasn't happened. It's taken nearly 3 weeks to get things back and forth on email. It's so terribly slow. And I thought, just looking at this, I thought, if I could have just got on with the underwriter and the broker, I could have told them all the crap that I had to write in their long-winded form in about 5 minutes, and they could have just said yes or no, and we could have got on with our lives. But the other thing that also comes through in this article is about the training that they needed. And I'd love to have seen some of the early videos, because they said there were some really cringeworthy sales presentations in the early parts of lockdown. and that didn't work very well. But they're beginning to learn and adapt, and their pitches so that they're working much better now. So I'd certainly recommend the article. It's a really good piece, and I think it's a very interesting. It's certainly got me thinking about. I wonder just what this new different balance is going to be when we move forward now.
And it opens up lots of questions as well, doesn't it? Because how come, like to your point, you're not getting that service from your quite simple renewal process, but I guess this is Canadian-based, webinar and their organisations. So I just wonder whether they're just more tech savvy in that sense and can do it.
It also shows our prejudices, doesn't it? Because we'd never have thought, Marsh and Gallagher nor us would have thought of doing this before, but now we do because we had to. And then we've adapted and said, so the first part, the way people think and how they come to conclusions about the world around them, how they adapt, is that learning process. Obviously, it's experiential, is behavioural terms, the biggest factor. And that's what I think you're seeing here. You're seeing human beings in different situations saying, well, the experience is this. And initially you say, well, it was better before. Obviously, I presume that lives within the behavioural piece as well. But then suddenly you get this kind of thing that says, actually, we found a way to do it within this new environment. And because, we all know, from our kind of basics of behavioural science that we all, human beings are incredibly adaptable, that's perhaps what we're doing. And this is just one of those things. But it really did make me think, actually, because I've been very much of the view that actually we will snap back largely to where we were before. But this opens up a whole new arena for saying that a portion, at least, of sales could easily be done remotely, and that might be better for the customer.
Yeah.
At the end of the day.
Okay, let's smooth things on. So, as I said at the top of the show, we've got part 2 of the Matt Hodges-Long interview, and this week Matt is concentrating on the Grenfell Tower disaster. As I said, this was recorded last week, so before the government announcements were made earlier this week. But I think what this interview shows, and I hope what comes across, is just the complexity of the situation and the role of different stakeholders, including the insurance industry, in the in trying to sort this mess out. Anything else to add to that, Ben?
Well, only that I think this week there have been, even since we spoke to Matt, which was about 10 days ago, actually, so much more has been said about this. And I know Matt is not at all happy with how the government's response has been. And it's not, it's not for us here to sort of comment on all of that particularly, but to focus on the role of, which Matt talks about, empirical evidence and data, and trying to create perspective around even some of the most terrible, complex things, So I think that's what I would, say to think about as you go through the talk. I mean, Matt is very good on that stuff.
Okay, so here we go. Cameras off, and we'll play the interview. Yeah.
So just coming back to Grenfell, Matt, what's this is a very unfair question, but what sort of in a nutshell has gone wrong, do you think, and what's the way forward, I guess, and what do we learn from it?
That huge questions, all of them in their own right. What went wrong? The Grenfell fire happened, and it shouldn't have happened, and it shouldn't have taken hold as it did. And then you get into the multiple failures of why that happened. And as with all of these big sort of outlier events like Piper Alpha as well, it's never one problem. It's a series of failures, typically over years, that lead to that outcome. And touching wood now, I do genuinely believe that Grenfell is an outlier as opposed to a recurring event.
Yeah.
So then we look at the government's crisis response to Grenfell. And my personal view is that political statements were made in the immediate aftermath of Grenfell that have led us on started that sort of snowball rolling, and we've got to the point now where we've created a monster, which we call the building safety crisis, where thousands of people are trapped, being made homeless, bankrupt, and genuinely in absolute fear of their lives every night that they go to bed, because they genuinely believe they are living in the next Grenfell Tower. And most of that, so the insurance industry haven't helped with that. The media haven't helped. Government have definitely not helped. Everybody has just poured fuel on the fire, if you like, post Grenfell, to the point now where everybody thinks they're going to die tonight, or a lot of people do. And there is no evidence to prove that that's the case. That's the back to the data point. Show me the data. Yes, there are problems with combustible materials on buildings that increase the severity of a fire if the fire gets into the external facade. But there aren't, thankfully, hundreds or thousands of facade fires every year. There are unbelievably effective systems within buildings like dry risers and smoke vents and emergency lighting systems, etc., which will help save people's lives, that are getting no attention because everybody's focusing on facades and Kingspan insulation and Celotex, because they're all following the Grenfell inquiry. So we're focusing all of our policy making on one outlier event, rather than looking at where are people dying in fires. You know, in houses of multiple occupation, in flats above kebab shops, in care homes, in low-rise buildings. All of these things, because Grenfell was a tall building covered in ACM cladding, are all being ignored by the policymakers.
Yeah.
So we're not following the evidence. And that's where I think when people say, I was asked today on the BBC, you know, is there going to be another Grenfell? And I said, well, I hope not. But my thought is it could happen, and it probably won't be a tall, narrow, high-rise building with cladding on it. It will be a short, squat building full of old people, or a school, or something else, another type of building that we hadn't considered, or we've all considered in this world, but the press and the government aren't looking at because it doesn't fit the political narrative. So it's become a particular kind of cause for me over and above the business.
But it also has parallels within, it seems to me, also within COVID, and how evidence and data is used, isn't it? And clearly it can be used politically. It can become a political hot potato, and then everybody's absolutely terrified of, you know, what they say about anything like that, and you can understand why that happens. It's hard, though, to see, perhaps, or maybe it isn't, that going forward, where you get these sort of calm voices of reason coming through, because everybody seems to have a standpoint, don't they? Even when they're the data people. I think the epidemiologists, I'm thinking particularly of Jonathan Sumption, you know, who took a particular standpoint, as now being kind of flamed by someone. So it seems in the modern world it's very hard to you know, to kind of stop this potential fear, not just of the event itself, but the reputational damage and so on and so forth. It's part of transparency, I guess, as well, isn't it? And the evidence and facts can kind of wither in the background somewhere.
Yeah, I think, but probably my observation with COVID is it was new, it was novel, it lacked a lot of evidence base over years, and calls were made on, you know, well, is it another SARS or MERS or whatever it is, and therefore it's not going to be transmitted asymptomatically, blah 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 blah. And then we learned from this, and we've adapted, and we've evolved our approach. When it comes to something like building safety and fires, we've got loads of data on that. We've got that over years. You know, a lot of these buildings we're talking about now that are now being told that they're, you know, dangerous and going to be closed down by the fire service have been there for 20 years. We've got thousands of them. We've got loads of claims data. The data is there to either prove or disprove the theory. And yes, okay, from an underwriting perspective, we might not have expected a total loss like Grenfell, and therefore we need to adjust the rates and all that sort of stuff. But the reality is we're not seeing this wave of total loss claims post Grenfell. So how that relates to a 400 to 1400% premium increase year on year is beyond me, but I can certainly see a significant increase based on the hardening market. I can see it based on the fact that commission rates haven't really moved, even though the premiums have moved hugely, so that's loaded into it. I can see lots of justification for significant increases, but I can't see these wild increases, a justification for that. And I think the ABI on behalf of its members has been spectacularly poor at justifying or articulating these price movements. There was Newsnight last night, particularly awful interview. And it's leading into this narrative that almost of trying to defend the indefensible. And I know this is a market. There's no price capping, there's no price restrictions. But at a certain point, you move into shooting yourself in the foot. And I think this will potentially provoke other sources of capital to come in and say, look, we can do this at 60% of the price. Yeah. Or it could just turn people off from insurance. I've had people contacting me saying, I really can't see the point in insuring our building. What is the point of this? And I have to say to them, look, you do need to do it. You're breaching your lease if you don't, et cetera, et cetera. But they'll say, I've got an all risks policy. And because we've got a problem that's been identified with our cladding, we can't claim. And so, well, you never had that cover. This isn't a warrant. This isn't what an all risk policy is. But then we get into how do you explain to a leaseholder what an all risk policy is, what's included, what isn't, the intricacies of it. How do you explain the fact that your management company is taking 60%, 70% of the commission for effectively doing nothing other than partnering up with a broker? How do we explain that the regulator says it's outside of their scope? Through a technicality, your management company isn't involved in insurance distribution. Those sorts of things I think we need to wake up as an industry. We need to say, let's put the customer at the center of this, realize that there's huge customer detriment going on, and let's work out what we can and can't address to rebalance this. And it just seems very short-sighted to me in terms of crapping on your own doorstep.
And I think to that point, on the focus on the customer, and we've talked a lot about that. I think it does seem to me that is always your constant, and it should always be a constant for all things in any business, really. And that harks back to, I think I was listening, I've mentioned it a few times, Mark Carney's speech this year, the Reith Lecture speech, which I thought was excellent, really, about looking wider than just the financial and economic issues in terms of value. Some of that.
Well, I think from an underwriting perspective, is sort of when people, because I've spent the last couple of years completely immersed in this whole building safety problem in terms of understanding all of the facets of it and where the opportunities are and where the risks sit and where the law's going, where regulation's going, etc. I'm not sure how many property underwriters, for example, are completely across all of this. They don't contact me and say, can we have a chat about where the market's going and what are you seeing, based on speaking to huge numbers of residents as well. So not only management companies, but residents that live in the buildings. So I think one of the points I wanted to say was that there is a huge untapped resource out there in the property world of the people that inhabit these buildings and live in them, that's their homes. And they've got the biggest incentive not to burn their own homes down. So if we're worried about fire risk, and if that's where we're petrified, they will do everything they can not to burn their own buildings down and not to get ruined by insurance costs. So let's engage those people and help them manage the risk within the building. They are the eyes and ears. And this is what post-Grenfell, Dame Judith Hackett was talking about in her Building a Safer Future review post-Grenfell, was to say that residents need to be an integral part of safety within buildings, not having safety. She describes it as safety should not be done to them by others. They are a key part of this. Whereas I think a lot of management companies and housing associations saw residents as just being an annoyance. And that certainly happened in Grenfell, where that community was marginalised. But we still see it now where a resident will contact us and say, look, we've asked for a copy of the fire risk assessment for our block because we've seen your tweets and you told us it's really important, blah, 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 to read it and understand it. But they won't give it to us. And the reason they won't give it to us is because they said it's a technical document that we won't understand. And I'm talking to a junior doctor or a cancer research professor or a lawyer, but they're being told that they won't understand a fire risk assessment by somebody in a housing association or a management company. It's just utter bollocks. And we just need to respect people and understand what everybody's motivations and alignments are, and just be respectful of each other and keep everybody safe. And I think the insurance industry has got a big part to play in that, and can probably bring forward a lot of the proposed regulation by actually saying, these are conditions we're going to place on insuring your building. So we know what the regulatory code is that's coming. We're going to faff around for years doing the legislation. We're a big insurer. We'll insure you for £100,000 less a year than everybody else, but you need to follow this regulatory framework.
Yeah.
Get it done, and then we'll move forward. And I think there's a great opportunity there to win a lot of business and a lot of market share for anybody that's got the guts to go back into this market that everybody else is running away from.
That's a good point, Matt. I always say that there's a great saying that performance lies in conversations, and it seems to me that somewhere along the line, a lot of the conversations stopped, and they need to start again.
Yeah, I mean, from our perspective, well, I would love to have the conversation. It's really hard to engage the insurance industry in this conversation about this class. I've tried with the ABI; it's not really gone anywhere. There is a lot of money to be made here, I believe, with the right data, the right risk management approach ongoing, the right product, the right engagement, but it needs some creativity. We can't deliver this product, but there are lots of product opportunities out there where we can show the need, we can help with it, but we can't deliver it. We're not a PRA regulated firm, we're not an FCA regulated firm, don't want to be. But we certainly can work with them if organisations want to put products or build products that are that will help consumers through this crisis. We would love to talk to them.
And
that definitely should be the London market, shouldn't it? I mean, I know its history and its ability to innovate and look at new risks and evolve. That should be London.
Would love it to be.
I was going to say a similar thing, Ben. I think if you look at the history of London, that should be the space they should be dominating and coming up with these innovative ideas. And it plays to Bruce's comments last week about underwriters. The best underwriters are those that are curious and want to understand the data, and then from that they can come out with these ideas. But if people just see it as a job, they go to work, they do the job, they tick the box, they go home, and then that's it. I mean, it's difficult to find those pockets of innovation in those big corporates.
We tend to be seeing that the premiums we see at the moment tend to be in the sort of 200,000 a year to $1 million plus a year premium range for buildings insurance. I mean, we're not talking here about £3,000 a year all risk policies. These are significant sums of money that I think would warrant, even if the premium was the same, but the product was better and it came with proper risk management, and we looked over a longer term and we got intimately involved in the remediation program to make that building safer, and we funded some engagement with residents to help them develop their safety. All of these different things we could look at with a bit more creativity, even with the same sum of money at the moment, because I think I was speaking to somebody today that thought that this sort of hardening market was probably not, the property sector was probably not going to go away for another sort of 12 to 24 months or not reduce. So actually those buildings now that feel that they've been beaten up at renewal are probably going to get another whack a year from now. So they need to start working on next year's renewal now and getting ready for that. So that's part of the narrative that we're playing. But wouldn't it be nice, for example, if they could actually procure a 3-year term with some kind of pricing guarantee and some kind of risk management arrangement that lasts for the duration of that. I just think we could be so much more creative about product delivery, product design. That it's just, it doesn't seem to be happening. It's just very stodgy.
I think one of the reasons going back to the broking market and how business gets into, say, London, for example, is it is incredibly cumbersome. And I'm just wondering how much of this now is, living within the broking houses as sort of bundled up facilities, so even though they are relatively large risks, I mean, for London, they wouldn't be huge, but they could well be just sort of living in great schemes, and whether therefore, there needs to be that, well, obviously there does, the big broking houses maybe need to be involved in this too, because you're going to have to look across portfolios, aren't you, and say, right, okay, what's the portfolio action that you take? Not just could we be entrepreneurial about one block or one scheme.
Yeah, definitely. I mean, so what we're seeing is a lot more of these risks now are going to subscription.
Yeah.
Typically 3 or 4 insurers plus on a lot of these. It's getting harder and harder to place. I mean, there's so many markets that are closed to this type of business, and and I look at them and think, well, actually, that's a well-managed business, well-managed building. Yeah, it's got a few. It could be better, but it isn't this awful tinderbox that people might think it is that would be reflected in the pricing. But yeah, there are opportunities to group buildings together into portfolios, build pipelines. There's opportunity for mutuals potentially. There's all sorts of creative, maybe some government capital at some point. There are multiple opportunities of what I have been calling for a long time, insurance market failure in this area around PI as well for professionals. It needs to be dealt with. It's a crisis situation. I think it needs the brightest minds in the insurance industry to come together and say, look, how can we fix our part of the problem? What are the dependencies? Because ultimately it might not be the insurance industry's fault, but it's certainly being portrayed in that way by the end customers. They just see this as there's a nasty insurance industry there preying on our vulnerability by gouging us over pricing. That's the narrative. And however I try and say that's not quite the case, you might want to think about, let me educate you on the soft market hardening and how that's masked the use of combustibles over the last 20 years. And let me tell you why sprinklers might not necessarily change your policy premium too greatly for this reason, etc. There needs to be a coordinated voice, I think, and I would look to the ABI to lead on that. And if they are, it's not coming through. Yeah, the message is not resonating.
Cool.
And the other area, although it's going to subscription, the other thing I was thinking is whether you just, the innovation, if you like, could become, on smaller schemes, for example, where insurers and brokers potentially collaborate more to create, as you say, policies that might work based on the data and so on. I can imagine that would be that kind of bottom-up approach could begin to work as well. It would be slower, but it could start to get people sort of interested that actually you can make these things work, because I think so often this top-down stuff gets stuck in the institutions, because if you think of the boards of the big carriers, certainly I know them quite well, they are grappling with both their own kind of remediation of their businesses quite often and constant, they're awash with data. I mean, they're drowning in financials, and I think rather like the banking system was, they're not quite sure of where to turn or where to focus. So it just becomes that sort of environment where it's hard to say let's do something innovative. But I'd kind of hope there'd be potentially a new breed of players coming through, that will do that in reaction to the large players. I mean, Bruce Carman, he's kind of one of those guys in the aviation, but as he said, that's a small niche really. But property's huge, isn't it? I mean, that's a massive part of every carrier's portfolio.
Yeah, I think if you can demand, in this market, you can demand your terms and say, yes, I will come back in, I will cover you, but these are the hurdles you need to jump through and over. And it's a two-way dialogue, and it's a new way of doing business, and we need transparency, and we're going to be demanding. But in return for that, we're going to cover you at a price that is more affordable than everybody else. we're going to be open with you about the components of our pricing. We can tell you what's driving that price and where we're worried. And if you can show us that our assumptions are incorrect in that particular area, we'll reflect that in the pricing. We ultimately, let's be open about the way that this pricing is built up. Not completely open, obviously, but more open, more transparent. And let's engage in proper dialogue with these. And I think you're going to end up with customers for life, and if you've priced them correctly, they're just going to renew and renew. I've had in different markets, this was in solicitors PI, one company that were with a broker for years, that broker ceased to deal with the insurer, and they actually moved broker because they had so much loyalty to the insurer. That they'd had some claims in the past, the claims would be, and they didn't want to lose their relationship with the insurer. So why shouldn't that be the same in other markets? Let's build that loyalty. Let's do the right thing. Let's look after customers. And I think it's a great business. Just got to price it right.
I agree. And I was thinking of the poor young woman who was on the BBC breakfast show with you. That was so, so sad at the end. The way she expressed it was kind of desperate. And I thought at the time, God, the insurance industry could do something there. And the knock-on effect of that would have kind of sorted that out for her quickly.
Yes, that's Hayley.
What an opportunity!
So you're talking about Hayley Tillotson. So she was the first to be declared bankrupt that we're aware of over the building safety crisis. She was bankrupted through her inability to afford interim costs, so waking watch in lieu of fire alarm and increased insurance costs and other service charge items. She hadn't yet got to the presentation of a 20, 30, 40,000 pound bill to rip off cladding and replace it on her building. And this is a young lady that bought an affordable home, in inverted commas, through the government scheme. And that combined with COVID, it finished her off. She's now a bankrupt, and that's been declared. And it's a really sad story. So it's not all the fault of the insurance industry by any means. No. She is a victim of this crisis that I think all of the stakeholders need to work through those issues and move at pace to fix whatever they can. And a big element of that, the majority of the problem is with our government and their inability to manage this effectively. But there are other stakeholders that could have done more. Let's put it that way.
Yeah, and as you say, though, Matt, brand-wise, there are moments of truth for insurers, I think. And I think if they started to look at that, they are, they've happened throughout the whole of the history of the insurance industry where, the big names have stepped up. And this seems to be one of those times, actually, I think.
Yeah, I think so. And I do genuinely believe that insurance is a huge source of social good if done right. I think there's that moral and ethical obligation to be there when people need you. And I understand that has to be paid for. I understand it's a market. We don't want people running at a loss, but sometimes you've just got to suck it up and do the right thing. And it may cost you a bit short term, but I think you'll see the rewards for that longer term. And I think where we've got a market failure like this and a crisis that we all need to step in and go above and beyond to try and solve the problem and do what we can and use our talents to raise awareness and go out on a bit of a limb as well, maybe, and swim against the tide, whatever.
Well, and I think insurers do that every so often. I think they've been, for lots of reasons, they have to be somewhat coy about claims and so on. And you can understand that too. But there's quite a big debate about reputation of the industry, which is at a very generic kind of level. But I think when it comes down, and I do some work in this area, I think when it comes down to individual players, I think we know those players who've been pretty badly damaged reputationally through this, individual players through COVID. I would hope that there will be an assessment of that, that is part of your value assessment, and that you ought to then see proactive claims action, these moments of truth happening more often. I think I really hope that happens. it's difficult though in a disjointed industry, I think, as well. That's the other thing with intermediaries, and there needs to be more collaboration there too.
Absolutely, yeah.
Great. I'm very conscious of time, and we've been talking a lot about a lot of issues. So, Matt, I just want to say thanks ever so much for joining us and sharing your thoughts. And perhaps we'll invite you back in the next few months, and we can reflect on the stuff that you've been talking about and how things have moved on, especially with the Grenfell Tower story that you're involved in as well. So, yeah, thanks ever so much for coming on.
Thank you very much. Matt. Yeah, love to come back sometime.
So I really enjoyed listening back to that interview. It was really good. I've jotted down just 3 things out of a multitude of things good said, but being customer centric, the reputation of the industry, and also being more creative around product delivery and design as well, amongst a whole other set of issues. And thanks Bruce. I think that was picked up, Bruce, your point about government inactions. And it's not just the fault of the insurance industry. And I think, as I said at the start of this is a very complex area. And I think Matt summed it up neatly. Your thoughts, Ben?
Well, a lot, really. I mean, I think there's a point, that I mentioned at the beginning about data, and having Bruce on is good, because he was talking about this. The point about curiosity and looking for commercial opportunities that have positive outcomes, value exchange, if you like. So I think that's really interesting. I think the other is, and I think Bruce is probably making a similar point, which is about these kind of systemic risks that are there, and that there should be much more collaboration. I think Stephen Catlin has also made this point rather eloquently too, which is that the insurance industry has a purpose, and we all who work within and around it know that purpose and how good it can be. But I think it is letting itself down around its higher level discussions with governments about a world in which risks are evolving and changing. You can't, as Matt says, expect the insurance industry to just pick up the whole thing after a Grenfell or even, a COVID. It's part of the solution. But you do and should expect that, and this is a, much higher than my pay grade discussion, but it does seem to me that that level of collaboration just isn't happening enough, and therefore it should going forward, and that there should be a constant dialogue about where insurers can help and work with governments to offset these risks and to help if and when they happen. And also then around the data, because I think my other point, I'll only make these 2 points, is Matt is saying, the level of data degradation, in a sense, is quite clear when the insurance policies are now written and the premiums go up. Of course, the premiums are going to go up, but the industry isn't engaging with the actual data and the actual evidence. And that seems to be a common theme, which is that somehow the structure now doesn't allow that to happen, or the decision-making doesn't allow that to happen. And that's the point, part of the title of this show today is Data and Innovation. And I think that's what the insurance industry has to think about.
And one of the things that comes up time and time again, and came up Tintech London Market, is the nature of the London Market's extended value chain. The customers here, the underwriters here, and they're so far apart that dialogue and collaboration is just, it's very difficult to see how that can happen in the current state. I don't know.
Bruce is asking, can we get a round table? Yes, we'll try, Bruce.
Right, yeah. I'll pick up the phone now.
We'll do our best.
To Boris as well. Came on. Well, that was great.
You never know.
Yeah, you don't.
We'll give it a go. We'll give everything a go. We're not
shy.
We're not shy. We're not afraid.
That's it. So I just want to say again, thanks very much, Matt, for sharing those thoughts and kind of giving us that insight into a very complex area. And yeah, it'd be great to pick that up. Okay, let's move things on. Ben, what have you got this weekend? Anything?
No, I'm cleaning up. We had a bit of work done in the house this week, so I'll be cleaning up the house, sprucing it up, and it's Valentine's Day, isn't it? Have you done anything about that?
No, obviously not.
Well, I actually have, so I'm feeling smug.
Well done. No, we don't really do Valentine's, but I have to paint this office, so that's going to be my present. I
don't normally do Valentine's, by the way. I should just put it on the record. But every so often, it sort of amuses me to surprise my wife with something, and then it kind of annoys her about the fact that I've done that.
My wife always goes, "Why do you waste the money? You know, tomorrow it's going to be half price." I mean, what are you doing? I was like, "Oh, fine."
Yeah.
Okay, very good. Thanks everyone for tuning in. See you next week, and enjoy the weekend.
Yeah, onwards and upwards. Have a great weekend, everybody. Bye.
Burgess and Bolton's weekly wrap up.